Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news: US Republicans are becoming more like the Chinese Communist Party than they probably realise. But first, there were 209,000 initial jobless claims in the US last week, a small decrease from the prior week, but less of a decrease that seasonal factors would have assumed. That resulted in a widely reported seasonally adjusted level to jump to its highest level in 8 months. There are now 1.757 million people on these benefits, almost 100,000 more than at this time last year. And that level may grow. The Challenger Job Cut report came in with another outsized count for May, and they were up 47% over the same month in 2024. They say layoff activity is now spreading to other sectors than just the federal government. And US exports rose slightly in April, enough to claim an all-time record high. And as expected, actually a bit more than expected, US imports fell sharply after the March pre-tariff splurge. The average of March and April was about the same level they recorded in each of January and February 2025. For April 2025, the $350 billion in imports were little different from the April 2024 level of $340 billion. It only looks like a big drop because of all the front-loading generated by tariff tax uncertainty. And we should note that US data reliability may become a bit more like Chinese data, heavily influenced by politics. In a random note, the Bureau of Labour Statistics said it isn't going to survey prices as deeply anymore, which could mean inflation will be what the administration says it is. They're also shifting the statistics agency to be under Howard Lutnick's control. And the Republicans have gone on the attack at the bipartisan Congressional Budget Office for saying their new budget will swell their deficit by $2.4 trillion US. The employees who released that are being laid off. They'll be replaced by more compliant analysts. Meanwhile, there's been a phone call between Chinese President Xi and US President Trump, but it seems to have achieved little other than agreement for more talks. However, mutual visits are a likely result, and the set-piece opportunities may give Xi an opportunity to get Trump to chicken out. North of the border, Canadian exports fell more than 10%, while their imports fell 3.5% in April. Again, the same trade and tariff war factors are at play here, and that has resulted in a record trade deficit for them. In China, the Caixin General Services PMI rose in May from April's 7-month low, and in line with market forecasts of only a very modest expansion. This survey shows a small uptick in new business activity, despite a renewed decline in new export orders. New export orders fell for the first time in 2025, dampened by the Trump tariffs. The official Chinese Services PMI also showed a modest expansion, one weaker than this Caixin version. In Taiwan, their inflation rate increased to 1.6% in May from 2% in April, and that's its lowest rate since March 2021. They are back to about what it was running in the years prior to the pandemic. And Singapore released its April retail sales data, and that showed virtually no expansion there. Over the past 6 months, their retail activity has been quite unstable in its ups and downs. And as expected, the ECB cut its key policy interest rate by 25 basis points at its overnight meeting to 2.15%. Updated inflation and economic forecasts show Eurozone inflation is near their 2% target, with projections showing 2% in 2025, 1.6% in 2026, and 2% in 2027. They say their expansion has been held back by global events, but all the same they see their combined economy expanding slightly faster over the next 3 years. And Australia's exports rose 2.1% in April from the same month a year ago. Their imports were up 3.5% on the same basis. The result was a sharp weakening in their merchandise trade surplus, as you might have expected. It would have been worse if their gold exports had not come in 48% higher than year-ago levels in April. The longer-term view of the year to April 2025 compared to the year to April 2024 saw exports down 5.2% and imports up 2.7%, showing the balance is tightening over the longer term too. And household spending in Australia in April was flat, but spending on recreational and cultural activities, Health and dining out contributed to a 1.5% rise in services spending, while spending on goods fell by 1.1%, with households buying less clothing and footwear and less new vehicles. Last week's container freight rates jumped an outsized 41% from the prior week, with capacity struggling to cope with the sudden Trump tariff tax pause and a new rush to beat what might happen in 90 days. It was impossible for shipping lines to adjust capacity for this unexpected shift. The largest rises were Trans-Pacific rises, up almost 60%. Despite that, these container freight rates are now 25% lower than year-ago levels, although those year-ago levels were in a sharp upswing that ran to mid-July 2024. Bulk cargo rates are also on the move up, gaining 9.5% in the past week. The US Treasury 10-year yield is now at 4.39% and up 4 basis points from yesterday. But Wall Street is weaker, with the S&P down 0.7% in Thursday trade as confidence in public policy fades in a sudden Trump-Musk slanging match. And the price of gold will start today at $3,352 an ounce, down $28 from yesterday. But American oil prices are up 50 cents at just over $63 a barrel, while the international Brent price is up the same at just over $65 a barrel. And the Kiwi dollar is still at 60.4 US cents, essentially unchanged from yesterday at this time. Against the Aussie, we're also unchanged at just under 92.8 Australian cents. Against the euro, we're up 10 basis points at 52.9 euro cents. That all means our trade-weighted index starts today at just on 68.3 and up 10 basis points from yesterday. And the Bitcoin price started at $103,373 and down 1.6% from yesterday. Volatility over the past 24 hours has been modest, though, at just under plus or minus 1.2%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.